Hello, everyone. It's now mid-December, and while you're all having fun, enjoying your holidays, it's very important that you don't forget about your tax planning to do before the end of the year. And since there's only a couple weeks left, it's best to start now. So I wanted to just go over a couple of very important things for you to be thinking about as we get into the end of the year. So first of all, I wanted to just say that if you have investments and you know that you've gotten some capital gains this year, don't forget about what's called loss harvesting. So you can literally trade some of your investments at a loss to offset your gains, and you can get up to a $3,000 loss on your personal return for the year, and then you would get a capital loss carryover. Maybe you need those additional losses if you sold a business or sold a piece of real estate. So don't forget about that if it's an option. If you have children that are in college, you may want to consider prepaying the spring semester now, because you'll get an additional education expense that you may be able to get as a tax credit on your personal tax return since you prepaid it in 2023. If you have a business, or even if you're self-employed, don't forget about bonus depreciation rules. So if you have a piece of equipment or a vehicle that's owned by the business, you actually are eligible for bonus depreciation up to 80% of the cost of that fixed asset. So if you have a lot of taxable income from your business, that is a great way to reduce your profit or loss that you're going to be taxed on. If you are a homeowner, or if you are somebody that itemizes their deductions, one of the things you might want to think about is making those charitable donations for the end of the year, because you'll lose them. Remember that for any cash contributions more than $250, you would need a receipt. And of course, don't forget to drop off all that old used clothing at a Goodwill or some other organization near you, because you'll get a deduction for your non-cash contributions as well. Anything over $500 you have to value, and you should talk to your tax professional about the best way to value those. But always make sure that you get a receipt from the place that you dropped off the items at. The other big thing that I would tell you, and again, this is one that you don't necessarily have to do before the end of the year, is your traditional IRA contributions. Typically, you have until filing deadline to make those contributions for the previous tax year. But if you would like, you certainly can make those before the end of the year. In some states, you also may want to make sure that you contribute to your children's college savings accounts called 529s. There are a few states that actually allow you to make those contributions after year end. So it's important that you check with your tax professional or check your particular state to see what the guidelines are for making those contributions. Lastly, one of the things that everybody likes to talk about is these electric vehicle credits. So if you are looking for an electric vehicle, you may want to consider that as well, because if you are below the income limits, and they vary based on your filing status, you may qualify for up to a $7,500 tax credit for those vehicles. Now, there are some criteria that you have to be mindful of, meaning final assembly had to have been done in North America. The credit would actually be based on the battery capacity of that particular model of electric vehicle, and make sure that you either bought it new or you leased it. Used purchases do not qualify for this credit. So again, if you're not sure, talk to your tax professional about that. So those are the main things. Certainly, you still have time to take advantage of these opportunities to reduce your tax liability and preserve your family's wealth. So please make sure that you talk to one of our tax professionals to assist. Thank you.